Welcome back to the channel, everybody. I got lucky last night with this order. I set a sell order for OUNZ, my favorite gold ETF, which I talked about in a previous video, at 46.50, and it filled. You might notice that the high on the chart is 46.24, so we'll go into how that happened in a minute. Also, what's up with gold? Isn't it going up? Why did I sell? All that and more. But first, I got links in the description. If you want to trade legally, OKX will give you $200 with my referral link. Kraken will give you up to $100 with my referral link. And if you just want to use Coinbase Advanced, you pay nothing extra, but they divert 30% of the fees that you would already be paying for each trade into my pocket, which is super nice. Back to the charts. If you haven't already, go ahead and hit that subscribe button and hit the bell so you get notified when we drop these babies on an almost daily basis. Now, gold. Why is OUNZ my favorite gold ETF? Is because you can demand delivery of physical gold by holding this ETF, which I think super cool. It's a Van Eck product. Some people like GLD. So guys, real quick aside on that gold ETF, OUNZ is actually not the best one to hold. If you're gonna buy and hold for yourself, you're gonna want IAUM or GLDM. I thought I looked into this before, but apparently I didn't do a very good job. If you don't know, we're learning it together. The expense ratio on these two is much lower. So unless I plan to ask for delivery of physical gold, I will no longer be trading OUNZ. If I'm on blockchain, PAXG, which is Pax Gold. Another good thing about Pax Gold is you can see what's happening with gold price action outside of market hours. And when you take all those profits on all that crypto, you can roll that into Pax Gold. And it's actually pretty much on par with something like Glint. If you're familiar with the Glint app, I've probably got a referral code for that too. Hell, maybe I'll just post all my referral codes down there one day and you guys can have at it. I drink AG1, I do all kinds of stuff. But back to gold. What's happening? What's up with gold? Let's take a look at the actual gold chart. As you might notice, gold, it's supposed to go up and to the right forever because fiat currencies are dying, right? Unfortunately, it's not that simple. Gold was a great hedge against inflation, and it was a great thing for central banks to accumulate. And then around here, it became a momentum trade, which means people buy it because people are buying it. And with that, gold began to develop fluff. Let's imagine that gold as an investment vehicle is a glass of beer. All right. You guys ever ordered a beer? Sometimes, especially Americans, will complain if it has too much of a head on it because you're not getting all your beer, right? You want a glass full of beer, and head is not beer. Europeans will disagree with you, but I digress. Now, around here, you have a glass of beer with little to no foam in it. But as you start to get here, your glass is half filled with foam. And when you get to here, you have about this much beer and about this much foam. This is in what we call wildly overbought territory. Gold has to come back here to the no fluff price around 3,500. And from then, it can go onward and upward and make new all-time highs. I like gold in general to have, but do I think it's overvalued right now? Yes. It wouldn't surprise me if it came down around 3,500, and if it does make it that far, I will be an aggressive buyer, as I'm sure some other people will be. But in case you were wondering why gold isn't breaking new all-time highs right now, and you know, with everything happening in the world, de-dollarization and things of that nature, why it's not making all-time highs, it's because there's already too much air in the bubble. It needs to shake out the weak hands before it can move on. So, guys, that's gold. I like it. I expect it to drop in the near term. If you look at history, that's what's happened. Let's take a little walk down memory lane, shall we? Here's the gold chart. All right, let's go bottom to top. Pull a fib, the old Fibonacci, right? Where'd it come down? It almost made it to the 786, honestly. It definitely made it past the 618. So let's take the 786 and do that, right? About 5% off the 786. Now let's imagine, you know what? Let's actually go here. What do we want to try to do? This low here. Pull another fib. That one's much closer to the 618, still in between. So these are not shallow. 10% off the 786, right? Third one, take the low, look at the volume. Oh my God. Oh, wow, it ain't nothing compared to 97. Again, we take the low, and let's take the absolute low, and we take the absolute high. All right, and where would 5% off the 786 would put us 2615. 10% off the 786 would put us at 2750. So where 3500 puts us about 40% off the 786 and about 10% off the 618. So people are calling for a 3,500 gold. You could even end up down here at 2,750. So food for thought. I don't know what else to tell you. I just look at history. I look at patterns, pattern recognition. It's a very powerful thing. I love gold. I don't want it to go down. I'd like to just buy gold and have it go up and to the right forever. But unfortunately, if you go look back at history, that has never happened. So I'm not expecting it to happen this time. And guys, with that said, if you got value, hit that like button. Make sure you subscribe and hit the bell so you get notifications when we drop these videos on an almost daily basis. By we, I mean me. I'm doing everything myself over here. Until next time, trade wisely.